All right, investors, welcome back to Shark Investments, where I help you identify quality stocks. Now, this is going to be a busy week. I'm going to break it up into two parts because we have 21, oh, nope, that's 20 companies made the list. One of the companies fell off this week. So, just like we always do, take a minute, take a look at these, and ask yourself who didn't make the list. Let's see if you figured it out. Come on, let's go swimming with the sharks. Okay, investors, I know this channel is still new and some of you are still trying to figure this out, so I'm going to go over this real quick, but it's in detail in my introductory video, which I encourage you to watch. I look at three things: cash flow per share, earnings per share, and dividends per share. A CF0 means increasing cash flow per share for 17 straight years. A CF1 means 17 years of increasing cash flow per share with one negative or flat year. Same thing for the earnings, E0, E1, and dividends is increasing dividends per share for 17 years for a Div0, and a Div1 is 17 years of increasing dividends per share with one flat year, no negative years allowed. Hey, if you like the channel, go ahead and give me a thumbs up, hit the subscribe button, and click on that bell. That way you'll be notified whenever we come up, and it's free and it's great information. All right, investors, let's get right into it. We're kicking off with Donaldson, DCI. They are yielding 1.8%. They are a Div 0. DCI makes filtration systems for air, liquid, exhaust, emission controls, those sorts of things. We can see here their cash flow, earnings, and dividends per share trend. A little bit rocky out here, but their dividend per share has been relatively smooth. And here's what that looks like on the year to year. Notice the gold bars are always above the zero line. Dover Corporation. Dover is yielding 2.7%. It's filled with gold because it is greater than the 2.6% that we are using as our cutoff, the Dow Jones Industrial Average yield. They are a Div 0. So here's a good sign. They are above the average and they're a Div 0. Dover Corporation, they are pretty diversified. They do industrial, aerospace, compressors, flow meters, precision engineered products, pumps, valves. They got their hands into a lot of stuff. Here's what Dover looks like. Rough years here in 08, 09. Okay, so everybody had that. They recovered, built back up again. Started having enough rough year from 13 to 16, and then they turned it around again. But throughout all of that, they had a pretty good dividend per share, trying to take care of their shareholders. And here's what that looks like in the year to year. Graco, triple G, they're at 1.5%. Graco specializes in pumps, spray guns, regulators, meters, valves, that kind of stuff. Everything from putting paints on cars and automobiles to food applications. So they're really into the spray mechanics type stuff. They are a Div 1. Div 1. Here's their one flat year, 08, 09. Gee, that's a recurring theme. We all know it. Here's what they look like in the trend. You can see here where they took hit and recovered. I bet you if you drew a straight line across here up to here, you could get rid of all this junk in the middle. Their dividend per share, nice smooth upward trend. And here's what that looks like on the year to year. All right, the Lindsay Corporation, LNN, dividend yield is 1.3%. Lindsay is new to us this time around. They produce irrigation systems under the Zimatac and the Greenfield brands, and hose reel retrievers. Can't say that I know a whole lot about them, and I don't have them in my portfolio, so I haven't done a lot of research on them, but they are a Div 0. And here's what their cash flow and earnings look like kind of all over the place, and their dividends per share is smooth but not real steep. So there's what that looks like on the year to year. MSA Safety, just as their name applies, they do safety equipment for industrial and military use and applications. They are yielding 1.7%. They are a Div 0. Div 0. MSA Safety, here you can see what their cash flow, earnings, and dividend trend look like. Kind of rocky in here. Looks like around 15 they got it together, and they've had some pretty good years after that. And their dividend per share, nice and smooth uptrend there. And this is what it looks like on the year to year. You notice the gold bars are always above the zero line. Next up, Middleby Corporation. Now, Middleby is not paying a dividend, so they are not qualified on any of the dividend areas. They do come in as an E1. An E1. And they design, manufacture, market services, cooking, and a broad line of warming equipment used by the restaurant and industrial kitchen industries. Middleby Corporation. Here's what they look like on their cash flow, earnings, and dividends per share. So that's actually not a bad growth curve there for Middleby. And here's what it looks like on the year to year. You know, again, not a bad growth curve to look at if you're interested in something other than income type stocks. This might be something to look at. Roper Technologies. Roper has a dividend yield of 0.7. And they are a Div 0. Hard to call them an income stock, though, at 0.7, even though they are a Div 0. Roper Technologies, diversified company, designs, manufactures energy systems and controls, medical and science imaging products, software, RF technologies. Some precision stuff there. Roper Technologies. Here's what that looks like on their cash flow, earnings, and dividends per share. And even though their cash flow and earnings have kind of had a rough time, they've been generally on an uptrend. And you can see that their dividends don't excite a whole lot there, but they're at least all on the positive side. Roper Technologies. Everybody's going to know this next name, Stanley Black & Decker. 2.3%, so it's not bad. It's not quite the average that we're looking for, but still it's not bad. It's a good, strong name that everybody knows. They are a Div 0. So for those of you that are looking for income investment, while the dividend yield isn't that high, it's a pretty safe company. So this is worth at least thinking about. Stanley Black & Decker, you can look here at the cash flow, earnings, and dividend per share. They've had a rough time. Really got beat up here 16, 17. But again, the dividends per share have always remained on the positive and growing. And here you see what that looks like on the year to year. Stanley Black & Decker. All right, and last for this installment is Tennant Company. Tennant Company, they're yielding 1.7%. They are a Div 0. Tennant Company. They specialize in floor maintenance equipment, so sweepers, scrubbers, specialized equipment used for maintaining industrial and commercial floors, roadways, parking areas. Tennant Company, here's what they look like on the cash flow, earnings, and dividend trend. Kind of bouncing around a lot there. But their dividend per share is relatively smooth in the upward direction. And here's what their year to year looks like. So that's going to wrap it up for this first installment of issue 9. We still have 11 more companies to look at, but I didn't want this video to go on too long. I will go ahead and get the second edition ready for you all, posted in a few days, give you a chance to digest what we've already talked about. And then we will take a look at the remaining companies. Plus, we'll find out who fell off the list. Remember, I've been doing this for a few years now, and somebody came off the list this week, so you're going to want to stay tuned and see who that is. Please like, subscribe. Let me know what you think about the companies that we've talked about in the comments section below, and please let me know what you think about how this channel is going, what I can do to make it better and more informative for you. I look forward to hearing from you all, and I look forward to coming back with the rest of issue 9 here in a few days.